Hey everybody, this is Mitch Ferraro from F Street. I hope everyone's having an amazing day out there today. I'm super excited. I have our owner and founder, Scott Lurie, with us. I'm always excited to have Scott with us because the guy is full of knowledge. He's a cool dude, and honestly, I just like hanging out with him. Scott, thank you so much for your time today. I really, really appreciate it. Today, we're going to be talking a lot about what we are now coming out with private credit. This is a new feature that we're having here at F Street, and I wanted to get Scott on to kind of explain why we're doing this, where it came from, what's the track record of what we've done already. So, Scott, thank you so much for your time today. I really, really appreciate it. Always love chatting with you. Love having this time with you. So, just kind of jumping right into it, tell us a little bit about this new feature that we have here, Edge and Sync, for our private credit. Give us what it is and kind of just what was the origination from this and why we're trying to do this.
Yeah, so it's supply and demand at the end of the day, right? We continue to see the evolution of private credit. As I fast forward from a $700,000 fund in 2009 to a $120+ million fund today, growth is part of our existence, right? Evolution and growth, evolve and grow, and private credit has really become more of a mainstay, but also a validated mainstay in the financial markets right now. So we're seeing private credit evolving. There's as in its totality of private credit, there's massive amounts of funds that are private credit funds, private debt funds that are servicing a very large need in what I would call the capital markets system, right? Real estate evolution, rising interest rate markets, capital stacks that are challenged, all eventually travel back to private credit, no matter how you look at it. And so I look at private credit as the opportunity to seize the moment for investors. If you look at 2024 for F Street, we raised a little over $30 million in our private debt fund, our PDF.
Yep.
And that is a testament. 2025 is already going to surpass those numbers and will continue to grow and evolve. People are interested in private debt. They're interested in private credit, and people can conceptually understand what it is, right? At the end of the day, you're lending money for someone's business purposes at some leverage point that works, right? And that's how people get involved. And so we see that happening. We also see the space that we operate in, right? Which is I would say the small market private credit, right?
Yep.
So small market private credit is kind of underserved, right? The large hedge funds, the large networks that have to put out billions, right? It's hard to do that with a $1 million loan here and a $2 million loan there and a $300,000 loan here and a $4 million loan here.
Yep.
To put out $1 billion doing that might take that infrastructure years,
Right.
and they don't have years.
Right.
So we fit in a small private credit market that is evolving. And what we're finding is there is a lot of dry powder, and people use dry powder as a very unique word, but it's capital.
Yep.
There's a lot of capital sitting on the sidelines
Yep.
in the markets that we're in, where people want to deploy. And F Street over the last 16 years have become the authority in private credit, right? We know what to do. We know the good and the bad. We've issued and underwritten. We evolve every day. Our product is growing. Our demand is off the charts.
Yep.
And so what we've found is that high net worth families and family offices,
Yep.
and those with tremendous amounts of liquidity, whether through exits of businesses, transactions, sales, inheritances, or just family offices, are looking to deploy capital.
Yep.
And so 2 years ago, in July of 2023, we did our first fund with an outside family.
Yep.
To allow that family to deploy capital. And it's been a wild success.
Yep.
And so I wanted to expand on that. And so that fund is to the tune of about $20 million today. And in addition to it, they've created some of their funds, we co-invest with them, right? F Street Investments co-invests with the fund.
Yep.
And so we've created Sync,
Yep.
which is a partnership fund where you can bring some and we can bring some.
Yep.
Or Edge, which is like the original fund created in July of 2023, where the family is deploying 100% of their capital, and we manage and underwrite and service the loan for them. And so the two new products are really focused on the 16 years of infrastructure that sits at F Street today.
Yep.
And the ability and the demand from families to deploy capital and have a little bit more control.
Yep.
So what Sync and Edge does, unlike the PDF or the private debt fund that we have, the private debt fund allocates loans across 500 plus loans, right? And those go through our standard course of action, and there is no one person, whether you're a $50,000 investor or $1 million investor, where you're offering, I want to invest in that or I don't. You're in it because you're in the diversified fund that has, once again, never missed a payment in the last 16 years and continues to evolve 30 million plus a year, etc. Sync and Edge allows for a little bit more control, right? So the family office, patriarch, whoever you want to describe it as, heirs, whoever that are the fund managers, we would call them.
Yep.
They would get our underwriting book. They would understand the loan. They would say yay or nay, right? Now, most of the time, 98% of the time, they've said yes to what we've presented with them, and those loans have all turned out to be wildly successful.
Right.
Issued, paid, repaid, paid off.
Right.
And so it provides, Sync and Edge provide a little bit more control, right? So the participant or the funds, wherever the funds are coming from, have the ability to say yes or no.
Yep.
There is a detailed underwriting schedule that's shared with them that includes a wide variety of underwriting items. And then F Street manages it, issues it, services it, and ultimately pays it off when those funds are repaid.
Yeah. And so a couple of things here, right? So this is completely separate from the private debt fund, right? So we have our investors that invest into the private debt fund. They do $50,000, $1 million, everything in between. They're in the private debt fund. This is for a little higher amount, $5 million, $10 million or greater.
Yeah, so just the distinction, just to be clear, is this is for $5 million and above of committed capital dollars. This is $5 million above. This is for those that want to be involved. You can put $5 million into the PDF and be involved in the diversified loans. That can happen too.
Right.
This is for those people that have the $5 million plus of liquidity that wants to deploy, $5 million of funds going in, and have control of the process. And that is the major distinction.
Yeah. And also with this as well, we have a proven blueprint that we already do. So this has been done before. We have families that have done this, and we are trying to grow that because we do feel like there's an opportunity out there to do this even more, correct?
Yeah, so yes. So the short answer is yes. We have 3 families that do this with us now.
Yep.
We have 3 entities that do this with us now. They're all doing well. They all want to deploy more. We're growing those businesses. But what we found as we sit and just talk to people throughout the world, as I'm navigating the world, people are like, what do you do? I want to do that. And I have money, $5 million. I want to be involved. And so I said to our team, we have 3. Let's get to 6. Let's get to 8 funds. And so we're looking to grow what we currently have of 3 family partners to get to 3 to 5 more is the immediate short-term goal. That's what this is all about.
Now, can you just maybe as easily as you can you explain what that process maybe looks like when someone, is going to now deploy and they're in and now they get to say yes or no? What does that look like for them?
I mean, it's basically what it sounds like, right? So at the end of the day, they would be presented an opportunity through our software and process flow, our workflows, where they would get notification of an opportunity. We ask that they have 24 hours to accept or deny. The opportunity would get presented to them. If they approved it, it would then move to I'm simplifying it, it would move to funding. Funding would happen usually 3 to 5 days later. They would then, those funds would either get ACH'd or wired into a bank account that they own that can fund to the title company. And then we would service it by issuing out we would get the recorded mortgage, we would get the title insurance, we would manage the closing, we would manage the entire process to close, then we manage the entire servicing process, then we would manage any repair funds that would have to be deployed, and then we would manage the payoff, right? And that whole cycle It might sound daunting. It's super easy.
Yeah.
It's infrastructure based, and we've got ample infrastructure and capacity here at F Street.
Right. So, I mean, basically, from what I'm hearing, it's, the PDF on steroids, basically the same process that we go through with the private debt fund,
It is.
just on a bigger scale.
Yeah, I mean, at the end of the day, any loan that is shared with a partner family is a loan that's already approved and ready to be funded by F Street.
Yep.
So all that's happening is mechanically is instead of F Street Investments being the mortgage holder, and might be Mitch Ferraro Family
Yep.
LLC being the partner family that's holding the mortgage. That's the nuance of it. If it's sync or edge, it's just some minor tweaks that are super easily conveyed and understood to anybody just looking to deploy material dollars.
Yeah. Now, a lot of investors may say, hey, you guys are doing so well. Why are you trying to get more money? Like, what are you seeing out in the marketplace that makes you want to do this even more?
Yeah, that's so great question. Very thought-provoking question, to be honest with you, Mitch. No, I like it because the answer is we've never seen more demand for our product, right? It's never been a time in my existence where our applications are coming in.
Yep.
The dollar amounts are wide in range, and the demand is so massive.
Yep.
And so I don't see that changing. I don't see the evolution of all of a sudden something changing where it's like demand's going to go down. I think demand's going to go up.
Yeah.
We're at 500 applications or 440 applications a month. I can get us to 800 relatively quickly, right? And so we have a plan and an ability to scale and grow. And our goal between F Street PDF and F Street's family of funds is to have $300 or $400 million of funds available and deployed.
Yep.
And so this is one way. If we can get the 3 to 5 additional families to join us that have $10 million of availability or $20 million of availability, those grow, right? So the relationship that was with the one families that started at $2 million is now $25 million.
Yeah.
And the one that's at 2 million will go to 5 million. And the one that's at 5 million will go to 10 million as improved itself.
Right.
And I'm confident in that ability. So demand's off the charts. We need capital to keep growing our business. We love liquidity. We love opportunity.
Yeah. And I think that's a big thing too. Like, there is a track record that we have 16 plus years of the private debt fund. We know how to underwrite. We know how to look at deals. We know what a good deal is versus a bad deal. And the opportunity that we're seeing is out there, and we're grabbing at it, and we need more capital to go ahead and actually capitalize on those opportunities.
That's 100% right.
Yeah. Awesome.
That's 100% right.
Awesome. Now, before we kind of get out of here, is there anything else that you kind of want to touch on about Edge or Sync? Maybe just, how people might be able to get in touch with us or how they can start the conversation, because this is going to be a conversation that we'll have to start, right? This isn't just all of a sudden someone's going to give us $5 million. If it is someone that's out there that wants to start a conversation, how can they get in touch with us, with you? What does that look like?
I mean, to just get to the point of it, the ultimate discussion is going to be between me and the partner family.
Yep.
We're not looking for 50 partner families. We're looking for 5.
Yep.
So we're looking to have those conversations. You're available. I'm available 24/7 to meet with you and talk to you, whoever you are. Mitch is a great sounding board for us as an introduction. We work lockstep, Mitch and I, in terms of the raising and the growing of the funds. Let's talk. If you're interested, if there's an interest, if you have your family, a group of your buddies want to create an LLC and be a funding source, if your estate wants to be involved, or if your business that sits on a lot of liquidity wants to earn more capital, there's 50 different ways that you can bring that capital to us. We're agnostic to it. And let's talk. Reach out to Mitch, reach out to me. All of us are available through our platforms for immediate communication and prompt response.
Yep, absolutely. So we're looking to grow a long-term relationship with any of the families that are going to be doing this, or any of the different entities that might be doing this. Like Scott said, we're looking for 5 right now. We may be looking for more once we continue to grow. But I do think this is going to be something that's very personable with these families. It's going to be one-on-one. There's going to be a lot of growing as a relationship. So then that is our main goal at the end of the day, is to continue to grow relationships and continue to make capital, or raise capital, and make money together. So
yeah. And to go one step further, all of the partner families that we currently have, I talk to them 3 to 5 times a week. I mean, multiple conversations of inquiries, of deal discussions, of workflow of transaction flow. I mean, all of that's discussed. So the answer is, once you become a partner family, a partner fund, we talk every day. I mean, we're talking and workflows are in place, and your expectation should be prompt, deliberate, material, and meaningful conversation.
Absolutely. Well, Scott, I always appreciate the conversation, the time. I know you're very, very busy. So thank you for everyone that was watching this today. Again, if you are interested in something like this, you can reach out to me, Mitch at fstreet.com, or Scott at fstreet.com. Please don't hesitate to reach out. We'd love to talk with you, and hope everyone has a great day. Thank you.
Thanks, guys. Talk soon.